Alibaba released their quarterly numbers before the market opens, a mixed report. Right now, at the time of making this video, the stock is down over 7%, has a market cap of $190.7 billion, forward PE 9.7 times, EV to sales just 1.1 times. So yes, of course, as you know, this is not an expensive stock. Year to date, the stock is basically flat. It's up 1.1%. It was up closer to 9% before they reported earnings. Now, if you look at the analyst estimates for Alibaba in the coming fiscal years, top line growth for fiscal year 2024, 3%, then an acceleration, both fiscal years above 7% year-over-year growth. With regards to EPS, a bit stronger for this fiscal year, 6.49%. And then for fiscal year 2025, a decrease of 0.93%, but then a reacceleration of 12.65% year-over-year growth in fiscal year 2026. Currently, the average analyst price target still sits above $100 at $105, representing 34% upside from the price we're at today. If you look at share outstanding in the last 3 years, those are down around 10%. With regards to all the other metrics here, I think it's pretty clear. We've been saying this over and over again, so I guess it becomes a bit boring to repeat that. But yes, on a forward PE, EV to EBITDA, price to sales, even price to free cash flow in the last 12 months, price earnings to growth, all those metrics will tell you the same thing. This is a cheap stock. Now, yes, of course, there is always the China risk attached to it. So basically, it's not for everyone. Some have no issue investing in Chinese stocks, others will have, and that's completely fine. It's an open market, you can do whatever you want. But yes, if something does happen in that region, then definitely those are the stocks that will take a bigger hit. And so like I've been saying in the past Alibaba videos, it's not for everyone, but for those that are opening up a position or for those that do have positions in Alibaba, Pinduoduo, JD, etc., you probably already know how you should allocate towards those certain stocks. There's definitely some value there, but you never know what might happen with the Chinese government, with that region, delisting, not delisting, fears of delisting, TikTok, etc. Even though it's not directly linked to their business, there's always that sentiment that it might impact those stocks negatively. So I'm sure most of you have that already in mind in your calculations when you invest in these types of companies. Now, before jumping into this video, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I'll first start off with a couple of comments here. First up from the CEO, this quarter's results demonstrate that our strategies are working and we are returning to growth. Our China and international commerce business realized double-digit year-over-year GMV growth through our focus on customer experience. We're also excited by the accelerated growth of customers and cloud computing revenues related to our AI products. We will remain focused on our strategic priorities and capture forward growth opportunities. Alibaba Group delivered a strong quarter with revenue growth of 7% year-over-year. We've seen early results from increased investments in our strategic business priorities and are confident in our business outlook. We are committed to continuing to return value to our shareholders. During fiscal year 2024, we repurchased $12.5 billion of shares, and our board of directors has approved a $4 billion dividend for fiscal 2024. With regards to those dividends and share buybacks, we can scroll down here and see. During this quarter, they repurchased a total of 65 million ADS for a total of $4.8 billion. For the fiscal year ending March 31, 2024, they repurchased a total of 156 million ADS, worth a total of $12.5 billion. As for the end of this quarter, they had a 2.6 net reduction in their outstanding shares after accounting for shares issued under their equity incentive plan. Then for the full fiscal year, they had a 5.1% net reduction of those same outstanding shares. With regards to dividends, two parts here. One, an annual regular cash dividend for fiscal year 24 in the amount of $1 per ADS. And two, a one-time extraordinary cash dividend worth 66 cents per ADS. So I guess at least you have that. You have share buybacks and you have dividends in case the stock doesn't move much. Now, moving into further detail here. So the biggest one, Taobao and Tmall Group increased 4% year over year for this quarter. Cloud Intelligence Group grew 3% year over year. Alibaba International Digital Commerce Group, always great growth there, 45% growth year over year. China, the Smart Logistics Network one, 30% growth there. Local Services Group up 19%, and then Digital Media and Entertainment, that's down 3%. So overall, they grew 8% year over year. When it comes to income from operations, that's down 3%. Net income is down 96%. Why is that? Well, they say here that that's primarily attributable to a net loss from their investment in publicly traded companies during the quarter compared to a net gain in the same quarter last year due to the mark-to-market changes. If you exclude all of that and certain items, non-GAAP net income would have been a decrease of 11%. So still a decrease across the board here. Adjusted EBITDA down 5% year over year, non-GAAP diluted earnings per share and per ADS down 5% year over year. With regards to cash flow for this quarter was $2.12 billion. For the fiscal year, that's $21.63 billion, which of course allows them to pay you a dividend and to buy back plenty of shares. As for cost of revenue and operating expenses, basically stays flat. And so if we look at the profitability side of each and every segment, Taobao and Tmall Group year-over-year change with regards to adjusted EBITDA, decrease here of 1%. Cloud Intelligence Group, increase here of 45% year-over-year for adjusted EBITDA. With regards to Alibaba International Digital Commerce Group, a decrease of 88% year-over-year. China Smart Logistics Network, a decrease of 321%. Local Services Group, adjusted EBITDA year-over-year growth of 21%, Digital Media Entertainment up 22%, all the others down 52%, so total segments down 9%. With regards to the whole fiscal year, you're seeing some better numbers, so it's true that from an adjusted EBITDA standpoint, things are getting better for each and every segment here besides the international one. Now I want to add some comment here with regards to Taobao and Tmall Group. So they also have their subscription service, which is called 88 VIP. So the number of 88 VIP members increased by double digits year over year, surpassing 35 million during the quarter. We'll continue to increase the subscription of 88 VIP membership among our premium shoppers by improving customer service and enhancing program benefits. With regards to the Cloud Intelligence Group, we already heard this comment before, so we are committed to our strategy of focusing on high-quality revenues from increasing public cloud adoption while reducing low-margin project-based contracts, which is why you're seeing this side. Revenue only grew 3% year over year, but adjusted EBITDA increased 45%. With regards to the international segment, of course, that's a segment that is competing quite heavily with Pinduoduo's Temu. So specifically, I want to touch on Trendyol. So that continued its double-digit order growth while maintaining its leading e-commerce position in Turkey. Trendyol has further expanded its cross-border business in the Gulf region. With regards to Lazada, that continued to focus on improving its operating efficiency. Lazada's loss per order narrowed significantly year over year during the quarter. Of course, as we've seen from adjusted EBITDA standpoint, still negative. And so looking at the chart right now, this is on the daily. First look at the daily. Of course, we were a little bit overbought before they reported earnings. Right now, we do sit just under the 200-day moving average. The 200-day moving average sits at 78.74, so we're really, really close. Then we did see a small rebound, I would say, above that 20-day moving average. The 51 sits at $75.39. If we quickly switch to the weekly, we can see that we had a solid rebound here from a couple of weeks ago, which is a line I drew from the recent lows back in October of 2022. We are making higher lows, it would seem. But for this week, of course, we also had the CPI report coming out on Wednesday, I believe. I would keep an eye on the moving averages here. Where can we find support? And then let's move onwards. But of course, CPI can make or break the market. It doesn't really mean much for your long-term view on the companies you're investing in, but in the short term, it might provide you with some opportunities if the numbers coming hotter than expected. And if the numbers are worse, which is actually good for your stocks, then the stocks might go up quite significantly. Overall, for this quarter with Alibaba, it's the same story. Tremendous company, in my opinion, great value, but of course, China risk. It's not for everyone, and I can understand the criticism, can understand those that are buying it as well. Just, I would say, allocate appropriately. That's all. That will be it for me in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye-bye.